Hello and welcome to the next edition of the Godfrey's Law Real Business Solutions podcast. My name is Brad McDonald and I'm your host today, and I'm joined today by Louise Neville, Director of Accounting Solutions Limited. Welcome, Louise.
Great. Well, thanks for having me, Brad.
You're welcome. It's great to have you on board on the podcast, Louise. It was wonderful to be involved with you last year down at your place for the Trust Act webinar that we did.
Yeah, that was good. That trust review, it was brilliant.
Yeah, really good fun. And we got through our technical glitches. Louise has got a couple of wonderful young sons who are very tech savvy. So they've been guiding us through this process and setting up all the wizardry in the background. And today we've been videoed as well. So this is a first for me.
Yeah.
Good. So welcome once again, and thanks for coming along. Today, we're talking about measuring financial performance.
Yes.
Exciting stuff.
Well, hopefully I can make it sound very exciting because it's something I'm really passionate about.
Yeah, definitely, and that's something for me, and why I like working with you, Louise, is your passion shines through in the work that you do, and also I've met a number of your clients over the last year or two, and they say the same thing about you. So,
that's wonderful. Well, thank you.
So that's a big positive. So, when talking about financial performance, let's start with the basics. What does financial performance actually mean?
Well, financial performance is all about the money you make, really, out of your business. So the performance of your business is how well is it going? Is it actually giving you what you want? And at the end of the day, financial performance is really the profit of the business. And if you step that backwards, it's not the sales. So sales and profit often get mixed up. Sales is what you're getting in from your customers, but then you've got all your direct costs that relate to that, like materials and things like that. So then you have gross profit, then you take out all your overheads or operating expenses like rent, etc., and then you're left with profit. That's the performance of it.
Right.
So financial performance, you can also track your cash flow to work out the real performance, because different businesses take a lot of different cash flow out from the profit. But in a nutshell, it's how you're going in profitability as to how you perform. And different businesses need different levels, or different shareholders need a lot of different amounts out of their business. So the performance of it is related to what else is needed from that business.
Okay, right. So there's a lot in there, and obviously in your line of work, you spend a lot of time doing this for your clients. I take it in terms of measuring. Benchmarking their financial performance for them.
Yep. So we spend a lot of our time. One of the most important things is to do it regularly. So annually, it's just not enough. And so business owners should really be checking their figures every month and benchmarking and making sure how they're going, not against other businesses. It's not about other businesses. It's about you, and it's about what you're wanting to get out of your business. And so every business can improve.
Yes.
And can perform better. And there's some fantastic ways of improving that.
Right. One question I have is, what is the difference between financial performance of a business and the financial position of the business? Or in fact, is there a difference between those two things?
Yes, that's an excellent question. There is a big difference. The financial performance is where you make your money, so how you make your money, and then the which is your profit and loss account.
Yes.
And then your position is actually where you go and spend it, in a nutshell.
Okay.
So, that is the balance sheet. So the balance sheet is a point in time. So when you're looking at the position of your business, always wait till the end of the month. Wait until you've loaded all your invoicing and your accounts payable into the system. Making sure everything's balancing. Then you check your position.
Right.
So it's hard to check your position in your business throughout the month. You really need to have finished and closed off the month. But the financial position shows first the liquidity. So you have a short-term liquidity, which is really, can you afford your short-term debts? And that's really important. That's something we hone in on every month, if possible, with our clients. And if it's not monthly, it's 2 monthly or quarterly. So they know exactly their short-term liquidity, where they're heading in their next 3 months with cash flow. Because you can have all that profit and no cash, and good profitable businesses can go into liquidation.
Right, okay.
So that's the balance sheet, and also then long-term net assets, like is your long-term assets above your long-term liabilities. So the short-term and long-term solvency is what you need to check. And then the performance is the performance of that business, is it good enough for what you've invested into that business? Because you would have put in, as you know, Brad, a lot of time
yes,
over the years.
Sure.
And when you first started, you probably put a lot of money into it as well. And so then, are you getting the return on investment?
Yes.
So that's where actually the performance and the balance sheet, they both cross over, because one holds all the assets and liabilities, and that is working the company. Right. So the more you invest into your assets, which is a big thing at the moment, is with minimum wage going up to $20 and another week of sick leave.
Yes, that's right.
I know, and another public holiday. Just that extra week of sick leave is making our country 2% less productive if everyone uses it. And that's massive. So we really have to look at other ways of building our business rather than just from people. So it's getting into technology, getting into machinery and things like that. So that's the balance sheet, but you can get a bit tilted. So you need to make sure that the profit and loss or the performance of the business is actually performing well enough to pay for those assets and give you a return on investment.
Wow.
How's that?
That's, there's a lot in there. That's absolutely fantastic. I guess I would distill that down in a nutshell, perhaps simplistically, that position follows performance.
Position, yes, but you first need to invest that money in the first place.
Of course.
Yep, but that's a good summary of that.
Right, okay. And if I'm, just to pick something out of that rang in my ears, is obviously how often you're tracking and checking the two things against one another, essentially, is obviously pretty key.
Yeah, it is. Yes. And then, like, as you know, is there's things you need to do in your business, say on a daily and weekly basis, to do with performance. So let's say you're a manufacturer, you need to know what's going through your factory, what's coming in the way of work, what is in the factory and what's going out. And that's performance, like productivity, and same with the service business like yours and mine. Yes. We need to know how the team are in their productivity and their hours and on a weekly basis. So it's those sorts of things that as business owners, we are responsible for checking more on a daily and weekly basis. Okay. Whereas the position is sort of something that you're looking at once a month.
Right, okay, got it. A lot of businesses focus on profit. Is focusing on profit enough? And I think you've probably answered that in part in the last explanation you gave about the investments you make in people and technology and machinery and all those sorts of things. But, I guess you could say, and it has been this way for a long time, cliched, profit is king, profit is God. Is that the whole story, or is it just a part of the story in terms of measuring financial performance, your profit?
Yeah, that's great. It's actually part of it. So just checking profit would be probably fatal, actually, because, remember back in the earthquakes, when we had those big earthquakes, whenever we had an aftershock of over 5, we had to, or the business owners had to pull their guys off site, and that building had to get checked for engineering before they could go back on there.
Yes.
Sometimes that was 5 or 6 weeks. And what do you do with 25 of your guys? You've still got to pay them wages and find them more work to do. And you'd relied on that job. So we found at earthquake time, cash was king. So cash is so important. And getting the conversion days. So we have these cash conversion days, which is your debtors, creditors, and work in progress and inventory. It's about trying to push those numbers down and have them as small as possible or as low as possible. And that way you have more liquidity, short-term liquidity, more cash in the bank. So every day you reduce your inventory that's out there, that might give you, say, another, depending on your numbers, but that might give you another 15,000, 20,000 in the bank account. It's better off in your bank account than out sitting on your shelf.
Most definitely. Yeah.
So tracking cash flow is vital. Net wealth of the business is the other key thing to track. Tracking the net wealth of the business and making sure it's steadily going up is quite important, because it means that because you can make the profit and even have the cash flow coming in from, say, a loan from the bank, and then the wealth of the business or the net equity is going down. So we track the whole three of them together at Accounting Solutions. We track the key performance indicators around performance.
Yes.
Then we track the cash flow and then the net wealth. And you might think it's a bit of an overkill to do that more than once a year, but we're doing that like every month, 2 months, or quarterly for our clients.
Right.
Because as we've found out, as business can go upside down pretty fast.
Most definitely. Still on the topic of profit, in terms of measuring financial performance, there are a lot of different confusing measures. So we hear the words gross profit, net profit, cash flow, etc. What are the key ones to focus on, or are there key ones to focus on, or are they all part of the overall matrix that you've got to be looking at?
The one I love, I focus on all of them, but my favourite is gross profit. Gross profit margin, because I know that's not net profit and it's not cash.
Yes.
So it's not the performance and it's not what's in the bank. We track those as well. But when I want to really help a business owner change their business, we hone in on that gross profit and that gross profit margin, because everything above the gross profit line is where you can really make a difference, like a massive difference to your net profit and your cash flow. So if we focus on there, sure, you focus on your overheads once a year, or at least once a year, but gross profit and above that line you can be doing weekly, daily, monthly, and you just tweak like the things that make up gross profit are your sales, your purchases, and like direct costs like purchases, materials, stock, and wages, productivity of the direct team that are actually out there generating the money and doing the physical work.
Yes.
So it's those. If you focus on there, you look and alter that by 1 or 2%, and whammo, you've got a fantastic, better looking bottom line and cash flow.
Great, and that's what it's about, isn't it?
Yeah. Also though, tracking that cash flow and the conversion days and pulling them down is vital.
Yeah.
And focusing on sales is good. But a lot of people really focus on sales, but they forget that they can actually make a big difference by looking at their suppliers and on that purchases margin.
Definitely.
Wages. Yep. Yeah. And net wealth of the business overall performance on the balance sheet.
I tell you what, there's a lot of good tips coming out here from Louise, because I'm hearing a lot of things that are resonating with me as a business owner, and the things that are resonating with me are the things that I know and I've heard, but I've maybe forgotten,
Yes.
in terms of the many different areas you can look at. And I guess that leads me into my next question, talking, measuring all things measuring financial performance. We hear a lot about benchmarking.
Yes.
So how do you know if the performance is good enough of your business, and what is benchmarking, and how does that, what can that tell you about your business?
Well, benchmarking is a brilliant way to see where you can actually improve your business and to see that you're on the right track. So there are organisations out in New Zealand that benchmark against other businesses. So we're affiliated with 2 or 3 of those, and you can put all the data in, and it tells you in your industry how you're going. But after me being in business for 23 years, you can put a set of accounts in front of me and I can tell you straight away, like I looked at a business this week, I knew straight away where the problem was. Like the purchases margin was fine, wages margin massively blown out. And then it was in the operations team as well. It wasn't down in the management or the overhead area. And so that just shone out straight away. And for the number of sales that business was performing at, I knew instantly that there was an issue there. So, you spend an hour drilling down in a certain area and go and change that and tweak just 10 things in the business that relate to the team. incredible differences is what we see come out the other end. But every business, like there's a set margin that should be on overheads, specific things within the overheads, like rent is one, and marketing, those sorts of things. And then same with up in for benchmarking is good to measure for purchases, wages, all those areas. But same with assets. So how many assets it takes to drive that profit is what I have noticed over the last year, though. The more technology and the more machines that are coming into business, I'm watching that wages margin really drop. Way lower than I've ever seen before. It's incredible. And so I think we're now going through a new benchmarking and a new change in our industries. So as people get smarter.
Right. And Louise, what is a good rule of thumb in terms of benchmarking? You know, is that a yearly thing, or is it quarterly, or what's an ideal benchmarking scenario? When should you be doing it?
Well, we benchmark our clients every month to monthly or quarterly, depending on what they do with us.
Yeah.
But we benchmark that often, all the time. But it's not against other businesses. It's against themselves, because you can have a really performing business going really well, but there's still improvement that can be done in it, and altered profitability. So really it's about what the business owner's wanting. Are they getting everything out of that business that they really want? And it may not actually be about money. They might be wanting to really make a difference, maybe in their community or in the world. And are they actually, so that would be a benchmark. You'd put a benchmark or a key performance indicator around that they're actually doing what they want to do. It might be sustainability in a certain area, or, you know, why did you go into business? Are you actually accomplishing why you went into business?
Your purpose.
Yeah, your purpose. And so you can actually benchmark that.
Wow, that's fantastic. Just finally on the benchmarking, Louise, really interested to hear you say that benchmarking against yourself. Do you use sort of industry benchmarks as a baseline or as a reference point in any way, or do you solely focus on benchmarking the client against its past performance, for example, or how does that work?
No, I benchmark against what that industry standard should be. So I know majority of them, but if I get a business that I've never worked with before, or it's very specialised, I go and find out what those percentages should be, and that's what we aim for. But with all of our clients, I know what their margins should all be, and so that's what we're aiming for. And it's not something that can happen overnight. It's a period of time, but before you know it, it might be 2 or 3 years. You've got a totally different looking business than what you had 2 or 3 years earlier. Wow. It's just slow progression.
Yes.
Work on one thing, get it right, then the next.
Right. Powerful tool then. Yes, fantastic. So before we wrap up today, Louise, there's so much fantastic information in here. So all of you listening out there today, I think this episode will probably require a replay or two to get all the nuggets out. But what's your closing thought on measuring financial performance for our listeners today, Louise?
Very important you do it.
Make a start now.
Yeah. But I think the big thing to get is you can actually alter your business. You can have different results than what you're getting. If you haven't got enough money in the bank, not taking home as much money as you want, those things can all alter, but you do need to track your business and track it more regularly. Work out your key performance indicators of your business. Work out the key drivers. What's really going to make the difference by driving this business forward? And the other thing is track your cash flow. Know what's going to happen in your next 3 months in cash flow. And those key things in net wealth, making sure your business is actually moving forward. So tracking those 4 things is vital. It'll make a world of difference, and you'll start to understand your business better, of how you can make it look different.
Fantastic. For those people listening today who are interested in measuring the financial performance of their business and looking to improve that, how can they find you, Louise? How do they get in touch with you?
Well, they can just phone us. We're Accounting Solutions on Gaston Street in Sydenham and Christchurch. I work with businesses all through New Zealand. And our website, actually, we've got a 7 ways to improve your cash flow on our website. So it's asl.co.nz. And in the earthquakes, I actually made the this template up to work out what is needed in your business. Like, it's a health check, and what I think is crucial to run a really good business. And then so you can just go through and tick that and work out which areas you need to focus on in your business to get the better results the fastest.
And that's on the website, is it?
It's on the website, and you can go through and do that in your own time.
Fantastic.
asl.co.nz.
Wonderful. Oh, well, that's great. I'd encourage everyone listening today to go and check out the website and have a look at that free resource that Louise has crafted and put up there. That sounds fantastic, and I think I might go and do it myself as well, Louise.
Good, great.
There's always new things to learn, and I think that's one of the keys of being a business owner is always looking at the different measures that you can improve in, and clearly this is a big realm here we're talking about today. So, look, thank you so much for joining me today. I've really enjoyed having you on the podcast today.
Yeah, thanks, Brad. And our clients that work with you, they just love your robust and you can explain anything and go in action and get it put in place. So thanks for all the great work you do with our clients too.
Wonderful. Thank you, Louise.